Let's be honest. No matter how much risk we are willing to take with our money and invest in stocks, cryptos, etc., every one of us has some portion of money invested in fixed deposits. In fact, I was going through some data and found that nearly 32% of Indian household savings are parked in FD. Simply because FDs provide risk-free return that gives a peaceful sleep. And every person has different goals in life. If you have a short-term goal of say 1 to 2 years, you should not take risk with your money with stock market. And that's where one of the best option is FD. Even if you are an aggressive investor, FD can help you with diversification and balances your overall portfolio risk. At the same time, for someone in 50s or 60s who does not have a very high risk taking appetite, might want to have good allocation in FD. In short, FD is a part of everyone's journey, no matter whether you are in your 20s, 30s, 40s or beyond. Hey everyone, my name is Sahil and this is my Personal Finance Academy. While equity market is a great option to invest money for wealth creation in the long term, it is very volatile in the short term. And I get multiple queries on where to park money for short term. That's where today I want to discuss one of the best options for investment in short term, that is fixed deposits. In this video, I've covered some very important concepts of various types of FDs and how FDs really work along with interest calculation. I'm sure you'll find this video very useful. And at the end, there are some very important tips before you invest in FD. So watch this video till the end. Okay, before we begin, this video is powered by Stable Money, where you can compare more than 200 FDs that are insured by RBI up to 5 lakh rupee and safely book your FD online within few minutes in your top banks and NBFCs starting with just ₹1,000. That too, even without opening saving account. And currently, the FD rates are as high as 9.1%. Now, if you're following this channel, you would know that I only collaborate with brands when I really find value in their business. And Stable Money is looking very promising as a potential one-stop solution for all fixed investment requirement. So I'll also explore this platform and discuss the important questions around it. Alright, let's get started. In very simple language, when you book an FD with a bank or NBFC, you basically lend money to them at a fixed interest rate for a fixed period. The financial institution guarantees to return the money at the end of the fixed period, known as maturity period, and pays you an interest on top of it. Now they may use this money to lend it to other borrowers and charges them an interest. A portion of this interest is passed on to you. Now the catch is that every bank or NBFC will have a different interest rate. It mainly depends upon the credit rating. Usually the top tier banks with higher credit rating will offer lower interest rate as compared to lower tier banks and NBFCs. So usually your small finance banks or new age private bank and your NBFCs offer higher interest rates. Then second factor that determines the interest rate is duration. You can book FD across duration. Generally FD with duration less than 1 year will have lower interest rate as compared to duration of 1 year or above. Now there are two types of FD based on interest payout frequency. Cumulative FD and non-cumulative FD. The key difference is that in cumulative FD, you get the interest and principal on maturity. So let's say you opted for a 5-year FD, then you will get both interest and principal at the end of 5 years. The benefit of cumulative FD is that your interest get compounded over the years. So here is an example of interest compounding in cumulative FD. Let's say you started with 1 lakh of FD at 7.5% rate. So you'll earn an interest of 7,500. Now your final value will become 1,07,500. So next year your 7.5% interest would be applicable on this 1,07,500. So you'll earn an interest of 8,000 and likewise your interest will increase to 8,600, then 9,300 and then 10,000. So basically, your interest has accumulated or rather compounded over the period of time. In non-cumulative FD, you get the interest in a fixed interval. That is your monthly, quarterly, semi-annually. Now this is useful for people who need a regular income, but the interest earned would be lower than the cumulative FD as part of compounding is not properly realized. Now there are various types of FDs like your standard FD, tech saving FD, flexi FD, that you should be aware of before investing your money. So let's explore them. So broadly you have 5 types of FD. First is standard FD, where you invest an amount for a fixed period at a predetermined interest rate. The period of investment can range from 7 days up to 10 years. Interest rate would vary across your bank and NBFC as well as based on duration. Then second FD is recurring deposit, also known as RD, where you can invest a fixed sum monthly or quarterly for a specified time. Think of it like SIP, good for those who want to invest a fixed amount every month or quarter. Then third option is tax saving FD. You can invest in tax saving FD to reduce your taxable income up to 1.5 lakh rupee per year under Section 80C. Although there is a lock-in of 5 years on tax saving FD. Then fourth is senior citizen FD. If your age is 60 years or above, you get an additional interest which is normally 25 to 50 basis points higher than normal FD. And fifth is your flexi FD, which is quite interesting and I guess many people are not aware of. A flexible FD deposit is linked to your saving account where you can instruct your bank to automatically transfer any sum beyond a predetermined balance to a fixed deposit via an auto sweep in feature. For instance, let's say you want to maintain a balance of 50,000 every month in your saving account. Then any additional money will be transferred to an FD. Conversely, if your balance falls below 50,000, the bank will liquidate a portion of your FD to maintain your balance. So that gives you two benefits: high liquidity of saving account and better interest rate of FD. Now before you book an FD, it is very important to verify if your FD has 5 lakh rupees of insurance from RBI or not. So as per RBI, any deposit in a bank, including FDs, are insured up to 5 lakh rupee per depositor per bank. So if you want an insurance up to 10 lakh rupee, then you can have FD with two separate banks. Likewise, you can do the math for more insurance protection. This insurance amount includes your deposited amount and the interest earned on that deposit and is provided by DICGC, that is an RBI subsidiary. All commercial banks, including small finance bank, regional rural banks and cooperative banks are covered under this DICGC scheme. Please note that NBFCs are not covered under DICGC 5 lakh insurance protection scheme. So when you book an FD with NBFC, be careful and only select top rated NBFCs like your Bajaj Finance, Shriram Finance and so on. Now that you've got a decent understanding of various concepts of FD, let's try to dig deep into how to book FD at highest interest rate. Since FD rates vary across institution and also depend upon investment duration and also the fact that FD rates keep varying periodically based on interest rate scenario. Hence, it's very hectic process to Google the latest FD rate for each of the bank and NBFC, and then you have to reach out to individual bank or NBFC to open an FD with them, and in many cases they even ask you to open saving account before doing an FD. So normally what we do is we make an FD with the bank where we already have an account. So let's say if I have an account with HDFC Bank, then chances are high that I'll get my FD booked with HDFC Bank. The only problem in this process is I would miss out on higher interest rate. As today many small finance banks with RBI insurance protection and NBFCs offer very good interest rate. And even 1% difference in interest rate can make a big difference over a period of time. Let me explain it. Now this is an example of how a difference of even 1% can make an impact on your return. So in first case, we have taken a principal amount of 1 lakh rupee and taken 4 scenarios. Interest rate of 6%, 7%, 8% and 9%, and duration is considered 1 year. So at 6% rate, you will earn an interest of 6,000. At 7% rate, you will earn 7,000. Likewise 8,000 and 9,000. Now a difference of 1% might look very small, but it has actually made a difference of 16.67% in your interest earned. Likewise, as compared to 6%, if you opt for 8%, it will actually increase your interest by 33.3%, and if you offer 9%, it will increase your interest by 50%. Similarly, if you look at a duration of 5 years, so if you look at 5-year duration, you will earn an interest of 33,800, then 40,000, 46,900 and 53,600. Again the same thing, while 1% difference might not look that high, but it will actually make an impact of 19% on your interest earned. Likewise 38.76% and 59% if your difference is 6% and 9%. And that's where this platform called Stable Money comes into picture, where it helps you compare more than 200 FDs with 5 lakh of insurance by RBI and safely book your FD online within few minutes in top banks and NBFCs starting with just ₹1,000. That too without even opening saving account. Let me show you the process. So this is the homepage of Stable Money, where on top you can see your earned 250 rupees reward point, most popular, RBI regulated. So these are the important features For instance, if you click on RBI, it says your money is 100% safe and secure, and all banks we partner are insured by RBI up to 5 lakh, and all NBFCs are RBI licensed too. And then you can see it says get assured FD return up to 9.1%, and you can see the popular FDs. And then if you scroll down further, you can see various information about it. Then there's an option called Explore, and if you click on this, it will show you the various options to compare the FD. For example, on top you can see explore rates across 200 plus banks. There's an option to explore it. So if you click on that, it will give you the list of all the banks with their FD rates. You can see there are more than 200 options across category, and you can even filter it by institution, as well as you can filter it by popularity and interest rate. So if you filter it by interest rate, it says Unity Small Finance Bank has 9.5% interest rate, right? And then let's say if you just filter it by popularity, for example, let's say you click on Bajaj Finance. Okay, then you can see the popular tenures where in fact you can click on it and you can see all the tenures for the Bajaj Finance and their FD rate for general and senior citizen. And then if you scroll down, you can see all the required information like highest credit rating, highly profitable and growing, RBI registered. Then you can see video KYC is not needed. Then there's a lock-in of 3 months. Apart from this, there are some basic FAQs that you can go through. So this is a very interesting feature, and one more interesting feature. So on top you can see it says compare FD and choose. So if you click on this, it will basically help you compare multiple FDs across parameter. For example, let's say we select top 3 options and then click on show comparison. So basically it will analyze those top FDs across parameter. You can see here Utkarsh, Small Finance, Bajaj Finance, SBI, across your highest short-term ROI, highest mid-term ROI, highest long-term ROI, minimum deposit. So there's a minimum deposit of 1,000 rupees for Utkarsh Small Finance, Bajaj Finance 15,000, State Bank has 1,000 rupees. And then you can see various other parameters. On leadership, Mr. Saurabh Jain is the co-founder of Stable Money. He is ex-CEO of Navi Mutual Fund. And another co-founder is Harish Reddy, who has 15 plus years of experience in the industry. It's been backed by top investors like Metrics Partner India, Lightspeed and Titan. Now I'm sure you would have multiple queries regarding this app. The most common one is, how safe is the FD with Stable Money? Please note that when you make an investment, your money directly goes to the bank. Stable Money never holds any of your fund. It only acts as an intermediate where it provides the platform to book the FD. You can even visit the bank or NBFC and verify the same. It means on maturity your money will be automatically credited in your bank account. Now in case you want to opt for premature withdrawal, you can do it from Stable Money platform. But please note that every bank has different criteria for penalty on premature withdrawal. So I think that Stable Money has come up with a very interesting product to cater to fixed income category and simplify the overall process of investment in the FDs. Now before we close this video, I have a few important tips that you should keep in mind before booking an FD. So first tip is FD laddering strategy. When you book an FD, try to create an FD laddering where it basically helps you divide your fund into multiple FDs with different tenures and interest rate, rather than putting all the money in single FD. So here is an example of how FD laddering work. Let's say you want to invest 3 lakh rupee in FD and you divide it into 3 different FDs with maturity of 1 year, 2 year and 3 year. For example, 1 lakh with 1 year at 7.45%, 1 lakh at 2 year with 7.55 and 1 lakh at 3 year at 7.65. Now what happens is, as each FD reaches its maturity date, you can choose to either reinvest the amount into a new FD or utilize the fund as needed. This way basically you enjoy regular income from the interest earned on the maturing FD while having access to liquidity from the matured ones. Then second is TDS on FD. Please note that if the interest accrued on FD is greater than 40,000 in a financial year, then 10% TDS is deducted by bank. Overall, the interest earned on FD is taxable as per your income tax slab. So this is it for this video. We discussed how FD works, various types of FDs and how to book FD at highest interest rate with Stable Money app without any hassle. If you want to explore this app, I provided the link in the description and pinned comment section. Even if you don't want to book an FD right away, you can use Stable Money app to identify the best FD rates in the market and even compare various FD across various parameters. If you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.